We have today with us Mr. Sverker Kjellgården from Cibus. Could you start by telling us a little bit about Cibus and your own background?
Sure. Cibus is a real estate company listed on Nasdaq Stockholm. We have currently a portfolio of 140 food and daily goods stores, all located here in Finland. The company has a market cap of around 400 million euros, and the properties are valued at approximately 850 million euros. Myself, I've been working in the real estate and construction business all my life. After university, I spent 11 years with the NCC Group, followed by 8 years at Huvudstaden, and then on to a turnaround project of a big partner, a mid-sized construction company.
How do you see the real estate market developing from your perspective?
Real estate is always an interesting case for shareholders. There is a physical value in properties that you can feel and look at. As for retail in the properties, it's under a bit of a threat from e-commerce, except for one segment, that is food, where we are currently. And that's a very important point in when you look upon Cibus, because we are not under e-commerce threat. On the other hand, we see positive effects of e-commerce, as our stores are natural networks for distribution, other online purchase.
How would you describe Cibus' strategy?
Cibus' strategy is very simple. We are concentrated in supermarket-sized food and daily goods stores with strong tenants such as Kesko, S Group, and Tokmanni. We have we pay out quarterly dividend to our shareholders, and we look upon the company today. We're named Cibus Nordic, so we are looking at expanding into the other Nordic countries. When and where, it's still to be seen, but we're looking at all the countries.
Cibus is offering an attractive dividend yield, which is currently a little bit above 7%. How are you going to reach your target of growing your dividend with 5% every year?
There is a fact in the market that we can always buy single assets or smaller portfolios to a higher yield than that we're trading at. That combined with our investment strategy of investing around 50 million euros annually will help us to raise the dividend to our shareholders.
Some of the portfolio's real estate is quite old and located in less attractive locations. How do you see these risks?
We have very good cooperations with our tenants, so we know long before the leases expires what they want to do with the store or the location. So we have plenty of time to make out a strategy if we want to sell it or develop it or whatever it is. But what you have to remember is that none of our properties stands for more than 3% of our total cash flow. So value-wise, it's almost insignificant what happens with one store. You have to look at the whole portfolio and grow it over time.
Thank you very much.
Thank you.